Once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. Job creation is now well below the level, or certainly below the level that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices.
Well, there you have it. The Fed's Jay Powell talking about concerns over inflation, jobs and tariffs at a news conference last week, which, as we know, sent the markets into a tizzy. Joining me now is the Lonski Group President, John Lonski himself. John, great to see you. The question is, can the Fed achieve its inflation goal with the incoming administration vowing to slash spending and implement tariffs?
Well, if the Trump administration succeeds at reducing government spending, that is going to make the Fed's job easier. We might actually have more than 2 rate cuts in 2025. That being said, I can't help but notice that of late, Treasury bond yields are climbing higher. I think this afternoon we have the 10-year Treasury yield approaching 4.6%. And that's way up from the 3.65% 10-year yield just prior to the Fed's first rate cut of September 18th. The Treasury bond market is worried about a continuation of rapid inflation in 2025. And of course, higher borrowing costs, especially as they relate to mortgage rates, mortgage yields, could slow the economy in the new year.
Yeah, that's a good point. I want to get on to Doge co-chief Elon Musk. He's been criticizing what he calls the overstaffed Fed in his pursuit of efficiency. I mean, this is clearly stoking the fire of what could come. I mean, how does that play out, if at all?
Well, if you're going to reduce government spending, you are going to have layoffs at the federal level, or you're going to have to reduce staff through some other means. There's no getting around that. Let's go back. Reagan became president. He took over January of 1981. In August of 1981, Reagan fired 11,000 air traffic controllers because of the PATCO strike.
Yes.
And that was a shock that was dealt to the labor market that had the effect of finally reducing inflation expectations to such a level that we got rid of that horrible period of rapid inflation that began in the mid-'70s and lasted until 1980, 1981. Do we have to go through the same process again? I hope not. But, along the way, cleaning up the federal government budget deficit, getting that down, may require some pain.
I arrived in this country, John, in 1982 when interest rates were right around 16%. So I always laugh when people complain about where it is now. But I want to move on because Donald Trump says the golden age of America is upon us. So my question to you is, what does Trump 2.0 look like for the economy next year?
Well, I believe that Trump is going to be flexible. He is going to listen to what the markets are telling him. And I think right now, with this rise by Treasury bond yields, they're telling Trump to go easy, to go slow with any imposition of tariffs. I mean, if we're trying to pursue improved efficiency in the public sector, improved efficiency for the federal government, why should we impose tariffs that will make the private sector less efficient? It doesn't make any sense. If Trump's aim is to lower inflation, to lower prices, to lower borrowing costs, then he has to proceed with the utmost caution as far as applying tariffs for the purpose of trying to gain a more level playing field for American businesses.
It's going to be very interesting to follow, that's for sure. John Lonski. John, thank you so much for joining us, and great to see you. Have a great holiday.